So were you wanting to buy a house this year, but the high interest rates have you sitting at home on the couch, looking at Zillow night after night, only dreaming about making a home purchase? Well, this week I'm going to share with you an amazing financing opportunity that could get you off that couch and out looking at your dream home with me. I'm Natalie Bratton with REMAX First. Stick around. I have something really important to share with you. Hey everybody, I'm Natalie with REMAX First in Oklahoma City. I am your Oklahoma ambassador, here to share with you all things Oklahoma real estate and just great places to go and things to do and awesome people here in Oklahoma that will help you on your journey to moving here. So the last 2 weeks I have talked about special financing, how as a home buyer, you can buy discount points. You can also ask your seller to pay discount points towards your interest rate. And that could get you from 7.5 interest, maybe even down into the 5s, which would give you a monthly payment that you could live with and be happy with. But today I want to talk to you about something else special, and that is called loan assumption. Now, it may sound vaguely familiar.
It's just familiar.
Hardly anybody has done loan assumption in the last 20 years because we've all been able to get really great interest rates on our mortgages in the last 2 decades. But now we are in a time where it's getting harder and harder to get a rate that makes us smile and a monthly payment that makes us happy. And so here we are really looking at loan assumption. Let's chat. So loan assumption is when a seller puts their home on the market, and not only are they offering the sale of their home, but they are offering to let you assume or take over their mortgage. Here are some details that must be involved in a loan assumption. So loan assumptions are not on conventional mortgages. They are on the government-backed loans, such as USDA, VA, and FHA. And most of the time when I hear about one or see one, it is on a VA mortgage. So if you are a home seller and you think you have an assumable mortgage, then what you do is you call the servicer who you make your payment to, and you say,
send me an assumption packet.
And they're going to send you all the information and the steps that you need to take to be able to have someone assume your mortgage. As a home seller, it is a huge incentive to put out there that,
hey, I owe X amount of dollars on my loan, and my interest rate is 4%.
In a market where everyone's getting 7.5%, 4% sounds pretty great. So you're offering that as an incentive to a buyer to come take a look at your house because they get a great interest rate to go with it. Now, one thing you need to know if you are a seller with a VA loan, that your VA entitlement stays with that loan as long as it exists. So if you are planning to go buy another house and you want to use your VA loan again, then no, you are not going to do a loan assumption with your buyer because your VA entitlement stays there. So when you go buy your next house, it needs to be cash or a conventional loan. Now, if the borrower, the new buyer, happens to have VA entitlement of their own, then they can have it attached to it. And in that case, you will get your entitlement back. But they don't have to be a VA to get it. So if you want to buy a house, and you say,
Natalie, I'm really interested in assumptions.
What I can do is I can create a search in our MLS for assumable loans. And look, out of 5,000 houses, there's only like 80. Okay, so it's not a common, huge thing. It's not a fast thing, but there are about 80 houses, and we would see if any of them fit your criteria. So if they fit your criteria, if there's one that looks interesting to you, I'm going to find out how much do they owe on the house, what is their interest rate, what is their monthly payment. And so you, as the buyer, you have to have cash because you are going to pay the seller the equity they have in the home. If they bought the home for $300,000, it's now worth $400,000. To assume their mortgage, you are going to pay them $100,000 as your down payment. That is the equity that they have in the property. But after you pay that $100,000, you take over that payment. You will get pre-approved with their loan servicer. So instead of having your own lender, you're going to call whoever they make their payments to, and you get pre-approved with them. And the process takes probably 45 to 60 days. So it's a little bit longer than a regular contract, but you get their payment at the end. There you have it, Loan Assumption 101 for you. That was dry material, but you hung in there great. And if you are interested in learning more about loan assumption, give me a call and let's talk about it. And let's see if that is something that would really work for you. Come back next week where I will share more about Oklahoma real estate. And you know what, really, we're kind of due to do something fun. I've talked about financing 3 weeks in a row, so I think it's time to go out and show you something, maybe some neighborhoods or some houses. So come back next week, and I hope to hear from you soon. Thanks.